Good morning, everybody, and welcome to this week's 10 minutes update at the beginning of the week, as we will talk about what is basically the most important things that we will be watching for this week going forward in the next few days. Last week we had a very interesting moves, very interesting data came in also from all over the world, especially from the US, but at the same time, we will be waiting for more during this week, as this will be basically another evidence of whether the economic activities is or are actually continue to slow down, which will help the Federal Reserve to start raising or start cutting rates soon, or if the data will basically give us more evidence that the Federal Reserve will continue to wait until at least between either September or November or even December. Last week, the Fed fund or the Federal Reserve dot plot showed basically a possibility of one rate cut only, while the Fed fund futures so far is still showing us that the Fed will be able to cut rates at least 2 times and possibly about 70% also in September and over 100% in November and in December. This week we have a lot of events that we'll be watching. At least on Monday, we don't have that much of a data. We have just the G7 meetings, which sometimes, depending on the statement they might come up with. But this week, we don't think anything is going to be very important when it comes to the G7 meetings. But we have from Canada, we have the housing starts, which kind of usually doesn't have that much of an impact on even the Canadian dollar. But we have the Empire State Manufacturing Index, which is usually it has an impact, but the expectations is not that big of a deal because we're talking about minus 12.5 compared to minus 15.6. Tuesday, the most important event, at least in Asia, we will be waiting for the Reserve Bank of Australia, which is expected to keep the policy unchanged. The official cash rate is expected to remain at 4.35%. But the most important thing, of course, is the projections and the press conference of the Reserve Bank of Australia's governor during that meeting. At the same time, we have the second day of G7 meetings. Again, it's not expected to do anything. During the European session on that day, we have the final readings of the Eurozone inflation, which is expected also to remain stable. This is why we're not expecting any sort of a huge impact. Although the U.S. session will have one of the most important data for economic activities, which is likely to show us at least some sort of either if the economy is slowing down or not, and it will have more data for consumers, which is the retail sales and the core retail sales. Both expected to show some sort of growth. At least the core retail sales, which is the most important one, is expected to rise by 0.2%. The main retail sales is expected to rise by 0.3%. We also have the industrial production, also the same rate, also 0.3%. Capacity utilization rate, nothing big on this one. And we might have also the FOMC members. Barkin will be basically speaking on Tuesday, and he's due to speak about the U.S. economy at the Market News International webcast, and the audience are expected basically to ask some questions. That might be also important. That's it would be for today. On Wednesday at the same time, nothing much from when it comes to Asia, except that we'll be waiting for the monetary policy meeting minutes for the Bank of Japan. After what they've done last week, they did not change the policy, but they basically promised the market that they will be doing something next in the next meeting. Plus, we have the trade balance also from Japan. The impact from those two events are unexpected to be that big of a deal. The biggest news on that day, on Wednesday, was going to be from the UK as we wait for the inflation data. Is expected, at least the CPR year over year is expected to slow down further to 2% down from 2.3%. That would be, if I'm not mistaken, the lowest inflation for the UK since almost 2021, April 2021, and that would kind of help the Bank of England to start cutting rates soon. So that would be the most important event on Wednesday. I think also the U.S. will be closed, and that will be um, because of Juneteenth. So I think we'll have banks will be closed, but I think we'll have half day in the markets. Thursday, we have a lot of data across the board, and we have also a lot of central banks decisions. To start with, in Asia, we have GDP for New Zealand, expectations showing like the growth of 0.1% after shrinking of the same rate in the previous quarter. But we have also from China, we will be waiting for the 1 year and the 5 years loan prime rate, and both of them are expected to remain stable or unchanged. That's basically it in Asia, but in Europe, we'll be waiting for two central banks' decision on that day, starting with the Swiss National Bank, which is expected to keep rates at 1.5% unchanged. We have also the Bank of England, which is also expected to keep rates at 5.25%. But we will be watching also the meeting minutes, which comes also at the same time, and the votes, whether everybody or whether the vote is unanimous or not. But the previous one, basically, we saw for the rates, we had 2 members voted for a cut, 7 members voted to keep them unchanged. So any kind of a change in the votes will be very interesting. On that day during the U.S. session, we'll have, of course, jobless claims. As always, we have the building permits and Philly Fed manufacturing index, plus the crude oil inventories from the U.S. will be released, and the crude oil inventory is expected to come up maybe around also 3 million in deficit after the draw that we had last week. Finally, on Friday, we have manufacturing and services PMIs all across the board from the UK, and we have also from the UK we have also the retail sales. But other than that, we have flash manufacturing and flash services PMI from all over the world, from Germany, France. We have also the EU, Italy, Spain, the UK, and of course in the US. This is when it comes to the fundamentals. But when it comes to technicals, basically, we saw a lot of kind of changes last week, especially with how the dollar index basically closed at the end of last week. We still have some sort of a reversal on the daily chart. Currently, this week, we have the most important resistance is basically stands at 105.67 and 105.80. Those levels were unable to be broken last week, so it would be very important to keep an eye on them this week. Technical indicators are still kind of positive, but they're not strong enough to say that there will be a new trend, at least for the time being. The same thing goes for the euro. We did break last week below 107.22, but the weekly close was above 107 still. So we're still hovering around the same that same area. The next support would be 106.60s, and that will be a level to keep an eye on, because a break of that might actually push the euro even lower and possibly toward 106.20s. And that would be the next major level, because this is the lowest. That would be the lowest level on the year if we get there, which is around the 106 figure. And moving to the British pound. The British pound was it looks like it's basically the British pound looks more weaker than the euro. We broke multiple levels last week. We closed below multiple support areas, including 126, 127. And we even currently trading below 126.73, which is the last session's low. Currently, I think also technical indicators with also the elections coming in July. Usually, this is when it comes to the British pound. Usually, this is not a great event, or this is not at least a positive event. And most time, you'll see more British pound weakness, and we might see that towards 126. That is also possible. Silver and gold, we saw a little bit of recovery. We did go all the way back up towards 2,340s, and we're still hovering around it. The most important level is still the same, which is basically the 2,286. That's on the support side. And for the resistance side, we at least need to do at least 2,350 for the upside to be broken in order to give us a little bit more of a push. Finally, oil, we saw a break above multiple levels, but at the same time, we are still trading below the 83.40. At least this is for Brent crude. And that level is basically need to be watched very carefully because a break above that resistance is needed for the bullish outlook to be even much better. So that would be the 10 minutes for this day or for this week or the start of the week. And we'll see you again in the next 10 minutes at the end of the week on Friday.